Mm-hmm. Yes, and we are live. Welcome, everybody. My internet's a little bit glitchy at the moment, but hopefully that won't affect anything. If you in the Q&A, if you have any questions, just to go to just go to the Patreon right there, or just write to the chat here in YouTube. So I'll start around 3 minutes, and we'll begin. Yes, so we can start. So we'll start by looking at the news headlines and then an economic calendar. Of course, most of the data from the economic calendar has already been released, but at least we'll look at it and basically what effect that had. So if anybody hasn't seen the economic calendar and what we can use it for, then it's probably a good tool to start by looking at that. Then we'll go and look at the cloud and then different indicators that we can basically use with the cloud. So this is basically a continuation of what we looked at last time we had a live session. Then we'll go and do a scan basically for stocks and foreign exchanges and indices for plausible trades and so on, and how those different indicators that we have been using can be used in order to determine what is a viable trade and so on. And then we'll have a Q&A, and everything should last around 1 hour. So yes, probably the biggest news today is, for example, that the US Treasury, for example, we have it down here, we can put it up on the screen, is up plus 6%. So it's 1.619 at the current stage. And that is a massive increase for a day. It has actually been increasing for a very long time now. Basically, begin all the way back in October here, we have been in uptrends. And it has been in the beginning of 2021, it has certainly really taken off. And this has a massive headache for stocks and so on. The other big news, for example, is the US dollar index has completely turned around. So in my analysis yesterday, I said that it probably will head towards the 50 moving average. It completely turned around and headed back towards the 200 moving average. And those two things are working against, for example, commodities. If you look at commodities today, and also most of the currency pairs that we look at, they are all in red. Because it becomes more expensive, less demand when the dollar increases in value. So the dollar index increasing and the yields also increasing, all working against for example, the indices and stocks, and therefore you also see quite a big pullback in the stock market and indices. For example, commodities here, everything is basically red apart from oil, which, well, it is most likely going to drop on the beginning of next week, most likely. So we can look at the economic calendar, and basically the major news was from Britain. So GDP numbers were horrible, to be very honest. And then we have the manufacturing numbers, which also were absolutely horrible. So for example, expected forecast was minus 0.8. The real actual number was minus 2.3. So due to the fact that the US dollar was increasing in value or appreciating, and you had these terrible manufacturing numbers from Great Britain, the Great British pound US dollar currency pair fell by roughly 100 pips. So it has gained some of its value, but it has still hammered. So we're still minus 0.45. So it has regained some of its but it was down roughly 100 pips earlier today. So that was basically what happened earlier today, and that's the main reason why that currency pair fell so significantly. So news, of course, has a major effect. Otherwise, there is not a lot of other important Canadian, for example, unemployment change, also really good, and appreciation to the Canadian dollar will happen because of the same. And then we have, for example, the rig count. So due to the fact that oil prices are getting to a level where it is now feasible to start production again for some of these rigs, you will see an increase in the rig count. That is what is expected. And an increase in the rig count also means it's a bearishness for the price of oil, because the more rigs that you have, the more the supply will become or increase, and therefore the price of oil will decrease. So supply and demand, depending on how much we drill for oil, has a major effect. So that is basically some of the major news. Otherwise, yes. So let's go and look at the cloud. So yes, we will go over to this chart, and this is basically we'll look at the NASDAQ, because that is probably what most people are interested in at this current stage. So we have dropped quite a bit in the NASDAQ, but we started by looking at I will just say the Ichimoku cloud, but I will just refer to the cloud. I'll also refer to the Japanese names of these lines as the 9 moving average and the 26 moving average and so on. It's easier to comprehend by just having the normal names. So this is what we were looking at last time, and I'll go really fast through this. So when price action is above the cloud, we're in an uptrend. When price action is underneath the cloud, we're in a downtrend. So in essence, never sell when price action is above the cloud. You can sell when price action is underneath the cloud. When price action is, for example, inside the cloud, you don't do anything. So it's basically a zone where you don't basically trade. So right at the moment, if we just look at the NASDAQ, we are basically right inside the cloud. So I was hoping that we would break outside of the cloud. For example, if you look at the 4-hour chart, no, that was not it. So 1 hour chart. We were basically outside of the cloud, and that this would continue. It may continue, but at this current stage in the daily chart, it'll probably take a few trading days if that occurs. Otherwise, we can actually turn around here and head towards the downside. So we'll just look at the daily chart. So we ran into resistance around this area here. This was basically at 13,126 and fell, and now we're trading at 12,866. And we're just hovering around here. So if we break below this cloud again, then we'll probably go back towards these previous lows. So one reason why we can say that we are going to the uptrend or downtrend is basically the crossing of these moving averages. So the red line is the convergence, and then we have the white line here, which is basically a 26 moving average. If you look at the details for this cloud, for example, we have the convergence, which is the red line. Then we have the baseline, which is the white line, and what the red line is basically is that we have a 9 moving average, which is the red line, and we'll have the white line, which is a 26 moving average. Then we have this gray line here, and usually we just cancel that because what we're going to look at later on is basically that we can add the Bollinger Bands to the cloud, and they will basically resemble the same thing as this line here, just even better. So what this line means is that price action, there's a lot of volatility when the distance between price and this line is big. So if we can get rid of this, we can see that there's not a lot of movement in these areas here, and therefore this line is quite close. There's a lot of movement right here, and therefore is far, far away. I don't like this line, and I usually just get rid of it because it is much easier to look at the cloud when that line is just gone. So if we just look at this, first of all, price action, if it's above the cloud, it's just buying. You don't look at the dips and so on. This is basically swing trading. You start at one point, which I will show in a moment, and you basically hold your position until a certain point. When price then goes underneath the cloud, then it's time to short. When price is inside the cloud, you don't do anything. So it's fairly easy to use this indicator for trading, especially swing trading. So the white line and the red line. So when the red line crosses the white line to the upside, it is basically a signal to buy. So for example, this is the fall last year of the coronavirus, where we had a massive sell-off. Then price increased. If you basically decided to look at this crossing here and decided to buy, then you would and just hold it. Then you would have an increase all the way up here to roughly 57%. So not bad. And the opposite is as well. When the red line crosses the white line to the downside, for example, right here, then it's time to sell. It's basically a selling signal. So if you did it right here, that is basically a move to the downside of roughly 24%. So in this area here, of course, there is no crossing. We are rallying, but we are on the cloud. So probably in this area here, you shouldn't basically do anything. When price action then, when the red line, the 9 moving average crosses the 26 moving average, this is basically the signal that you're supposed to buy. So you can also look at this, for example, in the 1 hour chart or the 4 hour chart. If you are day trading, this is more for swing trading. 4 hour chart, for example, you can see different kinds of crossing, and all of those indicate that you could start buying or selling in the 4 hour chart. It is also, but of course that's a different kind of trading. So that is basically it. So crossing basically means indication of buy and sell signals, and when you're above the cloud, it is time to buy, and when you're underneath the cloud, it's time to sell. That's basically what the cloud is. Very simple. Technically, you don't need anything else except to look at the cloud in order to determine when to buy, when to sell, and when to basically just hold for a buy or hold for a sell. For example, right here, hold for a sell. So another thing, if you want to buy and sell on a daily basis, you could add the Bollinger Band to this cloud. So if So we have the Bollinger Bands here, and we'll add it to the NASDAQ. And we have the upper Bollinger Band and we have the lower Bollinger Band. And by looking at the Bollinger Band, you can basically use the cloud and the Bollinger Band in order to determine when to buy and sell within this range. So, for example, if you only had the cloud and you decided to enter here, the cloud will basically say, or the cloud will basically indicate that you should leave the trade right here when you have the next crossing. But by looking at the Bollinger Band, it would be a far better to sell at this point. So if you go all the way back here, this, there. So for example, the cloud or indication of the cloud says that you should leave the trade right here because this is where the red line crosses the white line, and this is a signal to sell, and therefore also to sell the things that you're trading, because price's action is going to go in the opposite direction. But if you look at the Bollinger Band, it would be far better or profitable to stop selling right here. This is where you basically should have left the trade. And due to this indication here that we are significantly outside of the Bollinger Band and have been for a very long time, it's fairly obvious that this is where you should have basically stopped trading. So Bollinger Band, for example, if you combine the entry point for the cloud, which basically was there, and when this price action got significantly overstretched, which was there, then that is a more profitable trade than if you just look at when you're supposed to enter in the cloud and when you're supposed to leave. So this trade of roughly 47%, and this is a trade of roughly 57%. So 10%, give or take, more profit if you followed the combination of this and the Bollinger Band. So this is becoming fairly technical, and yes, it is very difficult to basically estimate when to enter or leave the market. But this is an example that you can use the Bollinger Band and the cloud as in combination when to basically enter the market and leave the market. So when you see something like this and the candlestick right like that, and it's basically time to leave. So the opposite is also also the case. So for example, if you have a signal here that the cloud says that you're supposed to sell, it's just right there, or if you can say right there, then the cloud would say that you should leave the trade right here. So you cross the red line underneath the white line around here, and then you have another crossing right there. So this is a trade of give or take around 15% to the downside. If you look at the Bollinger Band, for example, which is right here, when we're outside the Bollinger Band, you could have entered the trade here, and when you saw that we were significantly outside, it is a sign that you're supposed to basically sell. So of course, this is a very extreme case because there are several points here where we are significantly outside, but just as a point, the Bollinger Band can give a better signal when to leave. So this is a trade of give or take 26%. So far better than this trade of 15%. Yes. And then you can also, if you get rid of the, just get rid of the Bollinger Bands, becomes too many indicators here. You can also use tactics or strategies like finding major resistance when you basically break major resistance. So this was an area, or we had a triangle here where we tested. You can go right down right there. There. So we had major resistance here and we had major support. So a break of this line was an indication that this was going to go significantly higher. So of course we overshot here. This was also the first try, second try, and then the third try. So when we broke this resistant barrier, we can go all the way to here, is right over there. That is basically a signal that we were supposed to buy and hold for a very, very long time. So we can get rid of this and we can write something similar to that. So if you just go closer and see where the cloud basically said we were supposed to enter, then it was right here. So Cloud says we enter here. That is a very bullish sign. We have a few days, we have actually 2 weeks of price action increasing, and then we have the break of this line. So due to the fact that we have both an crossing here of the cloud of the 9 and the 20 moving average, that is the bullish sign in the cloud, and this is the very bullish sign that we break resistance to the high. So right here, around this area here, is where you basically should have bought and hold this for a very long time until the cloud basically crosses again. So if you do that, if you entered it here and waited until we had a crossing, it is basically right here, and that's a trade of 8%. If you look at, for example, at the Bollinger Band, you could have closed the trade around this area, and that's a trade of 12.7%. So this is a really long trade. It's basically a trade where you hold, you don't look at these dips at all. You just look at these 2 moving averages. As long as they do not cross, then the trade is just fine. You will continue making profit, and it will not basically go under until we cross yet again. So that is an example of using both the crossing of these 2 moving averages and a breaking of major resistance or major support. I don't have an example of that right now, but this is major resistance. That is a major sign for basically enter the market and just hold as long as these 2 lines don't cross again. So then you can also add the other indicators. And of course, the more indicators that you technically have, the more they basically all point to the same direction, the better it is basically to enter the market. So we can add, for example, the MACD. So we have the MACD right here. So we'll look at the same area, which was over here. So yes, so we have the resistance line around this area here, and then we can point, for example, when the crossing of the MACD is right here. So you can do it over again around this area here. That is where we have the crossing of the MACD. So MACD is basically crossing to the upside right here, and that is just before the crossing of these 2 moving averages. So first of all, you have the crossing of the MACD. We have the crossing of the 2 moving averages for the Bollinger Band, not the Bollinger Band, but the cloud, and then we have the break of this major resistance. So all of these are pointing to a very, very bullish sign in this market that we are going to hire. It's like all turning in at once. So then we also can add, for example, the stochastic. And then we will basically see that we, in this area here, will become fairly bullish. So when we have the crossing here in the I'll get it down here around this area here. So we have, for example, first the crossing of the signal line here in the RSI, in the stochastic. Then we have the crossing of the signal line in the MACD, and then we have the crossing of the moving averages in the cloud, and then we have a break of above here. So you could actually have entered, if you use this method, which is probably the most common method of determining when you are supposed to enter a bullish run, when the stochastic breaks to the upside, MACD breaks to the upside. That is usually what most traders look at. But you can also look, for example, at additional indicators. For example, crossing here, break of this major support resistance, and then we see this massive run to the upside. And that kind of tactics or strategies you can basically use everywhere. You can use it in the daily chart, the 1 hour chart, and so on. The more indicators you have going in the same direction, the more likely it is that you will have get it right. Yes. So we can, for example, look at time here. Yes, we can go and look for. You have any questions? Look at it. Yes, I don't have the UK 500. I can put it up in, for example, in E0. I have it there. Give me 1 sec. Go to the Pro. Yes, I'll change it over to that. Yes. So this is the cloud in Ether. I can get rid of the Bollinger Band here, so it's easier to see. So this is the daily chart, and this is the UK 100. And as you can see, we have a crossing right here. So the lines are a little bit different. So the 9 moving average is the blue line. The red line here, where is it? The red line there is the 26 moving average, and you see that we have a crossing right here. It basically was on Wednesday. So you could have entered it on Wednesday and then just held this. And as long as this is above, this will be trending to the upside. That is the idea. We can look at the other things. For example, right here, we have another crossing, and you have this massive rally to the upside all the way here, 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 and then you cross down, and then you break down. So, of course, you can have ups and downs in this move to the upside. This, for example, would be really handy if you had the Bollinger Band. If I can get them up here, you will see that it is very likely that that goes outside of the Bollinger Band, for example. So, for example, if you enter the trade down here, then you should have left it right there. Because if you combine the cloud and the Bollinger Band, then it's a far better, can give you a far better take profit if you basically leave it right here. That's why the Bollinger Band are handy. The cloud would say that you should leave the trade here when you have the next crossing. But at the moment, it is crossing to the upside, and that should mean that it should be rallying to the upside. It is also above the cloud, so that is the correct move according to this indicator. Just say, indicators have their limits. Don't ever think that any indicator basically can show you basically the way every single time. It will always be an estimate. Here, the estimate would be that you have the crossing to the upside and therefore and above the cloud, and therefore this should rally to the upside. Yes, yeah, I can basically show you that. It is the cloud actually in Ether is horrible. It is actually really bad. So we can have it here. I can get rid of all of this. So we just have the price action. So if you want the cloud, you go to this tool here, and then you go to studies one. Then you just go down, and then you see the cloud here, Ichimoku clouds. And then you get this. And the thing here is that I don't like the lag span indicator, and you can't get rid of it. So that is really irritating for this. You probably could add this to like 1,000 and then that moving average would just go away. But there should have been a X here that you basically can get rid of one of those. And now we can get rid of it at all. You should have been an X here that you can get rid of these lagging indicators because it's just horrible to look at it. So you just press, you can change the colors if you want, and then you just press OK, and then you get this up. So same idea. This line should have just been gone. There's brown line. And price action above the cloud, prices increase, and then underneath and so on. But of course, I would, if this is the first time you use that indicator, I would try it out in the virtual account first. It takes time to change method, and it can become really confusing if you're used to one method and then you change to another method or indicator, and it can be really confusing. So we can go to the scan because the market is technically falling. I haven't Forex and Exchange, NASDAQ. So yes, we have been rallying a little bit. So most of the tech stocks have been dropping, but they have pulled back, as I've seen quite a bit. For example, Apple was down roughly 2%. It is up now is 1%, and Netflix was around 3%, and now it's 2%. So yes, it is really, really difficult to basically say where the NASDAQ is going at this point. If yields continue to increase, it will be fairly devastating for the NASDAQ and other stocks, basically. So yes, I would be basically paying attention to that. But we can go, for example, and look at the scan for in TC2000, and that's the easy scan here. And basically what we're scanning for, or what I'm scanning for, is basically stocks that are either overstretched to the upside or overstretched to the downside. So the stocks that are overstretched, they tend to basically snap back. So the best way to look at that is to look at the RSI. So stocks that are at single digits or at, for example, at 10 or 15 in the RSI, or at 90 or 80 in the RSI, they tend to be outside of the Bollinger Bands to the lower side and to the upside. And what I mean when it's overstretched, this is an example of an overstretched stock. So when it is basically overstretched, it basically snaps back to the middle. The same goes for the downside. If it's outside of the Bollinger Band, it basically snaps to the upside. So that's always an interesting thing to look at. It doesn't always happen like that, but for a majority of the time, that is the case. It is really difficult to get something to increase significantly when it's this far outside of the Bollinger Band. So yeah, just to say a point. So yes, we'll look at the scan. So what we're scanning for is basically stocks that are outside of the Bollinger Band, or instruments of any source that are outside of Bollinger Band. So TC2000 has a scan, is pre-made the scan, so you can add the different kinds of conditions into your scans and so on. So for example, this is price X down below the Bollinger Band. And basically what this means is that you want to scan for stock where the price action is underneath the lower part of the Bollinger Band. So you also have the upper part that is here. That is basically stocks that are overbought. And in both those conditions, you can get stocks that are basically, they snap back. So look at this, and then you apply the scan, and then you can get a list of stocks that are basically oversold. So this is the 1000 cap. We want to look at the NASDAQ, and there is basically nothing here, and there is not the S&P 500. There is nothing there either. So that didn't help any bit. And that is also a good thing, because if you want to look at all of the stocks, for example, in the New York Stock Exchange, I think there's a 5,000 stocks, and it will take you forever to look through all of those. So we can look at the other, it's basically here. So yes, so this is basically stocks that are overbought at this point. So we can see that for the S&P 500, there are 500, for example, stocks here, and out of those 500, we have 16 candidates. So instead of looking through all of the 500 or all the stocks in the S&P 500, we now have 16 candidates that basically can fit these conditions where price action is outside of the Bollinger Band to the upside. So we can look at this. So the first one is LB. So you can see that this has rallied significantly to the upside, and what we're looking at is right this. So something that has snapped, or this has basically a gap to the upside and now is significantly outside of the Bollinger Band. So usually what also happens here is that due to the fact that we have this increase in price action, you also get an overbought condition in the RSI. So this is most likely stock that could fall back towards the middle. It doesn't necessarily mean that it will do that, but it could. So this is a stock that has been trending to the upside for a very long time. It's basically since August, it has been trending to the upside. So this has rallied around 154%. So if you look, for example, in the cloud for this, you will see that the cloud is slowly underneath all the time. You don't have real crossings of the moving averages. We have the major crossing down here in August, is right there, is basically in July. And since then, it's basically just gone up all the time. So you could have entered it right here and just held it for basically half a year now, and it most likely will continue. So now we're significantly overstretched. It will most likely drop back towards the middle of the Bollinger Band or the bottom of the Bollinger Band if you look at that. So that is a plausible stock to look at. Otherwise, I don't tend to sell, for example, stocks that behave like this or instruments that behave like this. It's always a bad idea to start shorting them. The better idea is to wait for them to pull back to support and then buy them, because they are in uptrend and there's no reason to basically to fight that uptrend. Just be patient and wait for the pullback, and then wait until it rallies again and then just buy into it. It's much safer. Then we have Ford Motors. So also here, price action is significantly outside of the Bollinger Band. We're not significantly overbought, so no, that's not a very good candidate at this point. So you have on the UAA, so also here outside, but not a high RSI, so you can go to the next one. So we have GM outside of the Bollinger Band, but also a low RSI. UA, same thing here. And this is a better candidate. So NUE, so also here outside of the Bollinger Band, RSI of 73, and we are, basically getting overstretched here. And of course, it is always possible to sell it towards the middle, but it's better to wait for this pullback, similar to these pullbacks, and then buy them. This is a far safer move than to sell this. So yes, so we can look at the next one. It is TXT. This is not a very good candidate either, also outside, but we have a 62 here in the RSI. ESS, no. UDR, so we can see that it has started to pull back. So we were all the way up here, and now it's pulling back, and usually it gradually goes towards the middle before going higher. We have an example of it right here. Pullbacks, if you get a red candlestick then on Monday, then you probably see something like this, or just drop towards the middle before going higher. That's why it's like that one. So here, gradually towards the middle before going higher. So we can look at the RTX. So these are overstretched to the upside, but we're not having a RSI that is very high. So it could pull back, but it's better to have an RSI that is higher than this. So ABC also here significantly. We saw this on Wednesday when it was also outside of the Bollinger Band, and it snapped back right here. So you could have started selling it here, and then you would have a trade of 4.4%. But it didn't fall all the way to the bottom of the Bollinger Band. So just this is the same thing. This is not a really good uptrend, but it is still an uptrend. So it's better to find support and then buy into it. So GD, no, not really good. CAG, so yes, so this is on the edge of being overbought. We're at 68 and also outside of the Bollinger Band here, but we have been for quite some time. So it needs a better indication. So for example, this is basically what we're looking for. So outside of the Bollinger Band, significantly, an RSI that is very high, and then just a drop to get that trade. So yes, there are 3 left there. So EQ, nope, not very good. TFX, sorry. So yes, this is a candidate. For example, we are outside of the Bollinger Band here, and we are at 71, significantly overstretched, overbought, and therefore most likely it is going to pull back towards the middle of the Bollinger Band at some point. So this could be, for example, something to look at. Then we have the last one here, and no, it's not very, very good. It is significantly outside, but we are not significantly overbought at this stage. So by looking, for example, at the scan TC1000, you can basically get easier to find basically trades that you can sell and buy. So this is just when they're overstretched. We have basically no example of the things that are basically oversold at this point. If this continues, then we'll have a lot of them. But at this point, we don't have. Yes, any questions? Thank you. I have to say all of those things all over again. Yeah, okay. I pressed forgot to press my button. Okay, yes, we have it. The cloud works perfectly with also with foreign exchange. So, for example, here we have the Great British Pound and the US dollar, and we can see that we are above the cloud, and that is basically has been trending upwards for quite a long time, basically since November. So the signal crossing is right here, and that is the beginning of November. This is 11th of November last year, and since then it has been trending upwards. We do have a crossing here. So this cloud says basically that you should sell it here. This is basically a sell signal, but we're still above the cloud. So we're still in an uptrend, but there is a sell signal right there. So we did fall and then rally, and until we basically cross over again, it will most likely drift lower. That's basically what this says. But we are above the cloud, and that is basically means it's an uptrend. It works perfectly with also commodities for Forex, indices. It basically works for everything that has a price action. Yes, any other questions? So yes, I am going to do my good question. I was just about to say next time I'm actually going to do a session about risk. So basically how you put your take profit and how you put your stop loss. So it depends also on what trading you kind of do. For example, in swing trading like this, your interval will most likely be significantly higher to the upside. For example, if you take this move here, so the idea here is that this is the Great British Pound and US dollar. You would put a stop loss right underneath this crossing. So if this was a fake crossing here and it all of a sudden turned around, then you would hit your stop loss. But to the upside, you would have a significantly, you technically just wait until you see, for example, this would have been a major warning that we are getting significantly overbought here, and then just leave. But if you are planning on just swing trading this and just holding it, then you should just hold it. And in to be very honest, I would secure it really well with a stop loss underneath if this was just fake, and then you can try it again when it crosses yet again and so on. But that's basically where I would put my stop loss. But I'll have it on the in the next session where I basically take profit and stop loss, and also leverage, and also a part of a big part of your portfolio you should basically use and why. So basically a risk management session. You hear it now, right? So Idur has actually one really good thing, and that is basically where you buy and sell. That screen in eToro is a really good example of how you set your risk, how you pick a part of your capital you should use, and so on. So I'll basically use that screen in order to do an example of what would be a good risk, a good trade to do when taking consideration the risk. Main reason why people lose money in this is because they don't manage risk. Yes, I think that should be it. Start again on Monday. So, good weekend, everybody. Thank you very much.